Good morning, traders. Chris Buss here with your morning look at markets for Thursday, May 27th. Let's dive right into it. Quick look at futures. Equities down between 0.25 and 0.5%. Gold down 1/4%. Oil down 0.75%. Copper's bucking the tide up 0.5%. Earnings today. Before the bell, we've got retailers Best Buy, Dollar General, and Dollar Tree. Plus, there's a bunch of Canadian banks that are reporting this morning. And then this afternoon, we've got Salesforce, Costco. And on the Costco chart, if you pull it up, it is right at the prior high, all-time highs. So this would be like an important thing. Is it just going to jump that resistance level and go from there, or is it going to be rejected at that level and head back down? So that one's kind of important from a technical standpoint. And then we've got Hewlett Packard, Dell, Ulta, and Viva that you can watch for earnings reactions. Now, it's also, I think, going to be kind of important today to watch the ones that reported last night: NVIDIA, Snowflake. Let's see, which were the other ones? Okta, Workday, Digital Turbine. Those are ones you might want to follow up on as far as reactions to the earnings. Now, before we dive into it, little reminder, you can always run this video at 1.25x. I think you'd be able to follow along perfectly well. And then, of course, if there's something you want to slow down for, you can always pause the video. But you'll find that control in the lower right-hand corner of your video player where you can advance the speed to 1.25x. A couple of news items I think are noteworthy I want to go over before we hit the charts. There was that engine number one, that new activist fund that roiled ExxonMobil yesterday at their shareholder meeting and actually got 2 board seats on that, on Exxon, and they are pushing Exxon towards more investment in the green space. And at the same time, Shell Oil was ordered by a Dutch court yesterday to accelerate their green investment program and or cut their carbon footprint. Same difference. But what I'm going to say, or the takeaway is, for oil going forward. And I know this will be a longer term thing. I'm not talking about in the next 2 weeks, but I expect these ESG funds to keep pushing along that climate narrative and decarbonization. And what's going to happen is, or at least in my view, what's going to happen is the CapEx for traditional oil and natural gas exploration in percentage terms is going to go down in the years going forward. But the demand is either going to stay the same or go up, because right now, I mean, we're still trying to come out of the COVID lockdown, globally speaking. We're probably ahead of the pack in that regard. But we already know that the frackers, smaller frackers, have been starved of CapEx for the last 5 years after their last blow up. Private equity has not come back in a meaningful way in the shale oil patch. So, long way of saying, there may become a structural supply deficit in oil going forward. that will keep a bid under it for years to come as the pressure from ESG leans on the supply side of the equation. And if you think about it, for the greenies, I'll just call them that, $150 oil is perfect. All the more reason to accelerate the green transformation, right? They don't want to see cheap oil. They want to see expensive oil. So the combination of making it hard to get permitting in the shale oil patch, lack of CapEx, and ESG pressure, I think oil's going higher. We're going to cover a chart on that today, but that was just something that I saw yesterday. And also, the Chinese yuan is at 3-year highs. Why does it matter? Well, our US dollar is pressing the lows. So if we go buy all those consumer goods in China and then bring them back, we're importing inflation, right? Because historically speaking, all things being equal, the dollar has been stronger than the yuan. So we can buy more with that when we go out to, bring in those imports. So now it's flipped. It takes more dollars to buy Chinese goods. So you bring that back, the price has got to go up. So that may be at least an intermediate term boost to inflation just due to that fact. So keep that in the equation. And also, we're coming up on a 3-day weekend. It's going to be important to watch for risk sentiment over the weekend because, find out who wants to really be long into that 3-day weekend. I think that'll say a lot for where we're at as far as risk appetite goes. Okay, enough of the macro. Not a lot happened yesterday on the index and FATMAAN names, so the benefit to me is there's not a ton of chart work to do. So I think in a lot of cases here, our pivot points are going to be the same. Starting on the SPY 2-hour, stay long north of 418. Below 418 opens up the door for a test of this gap at 417. You can see that's $2 wide. So be aware of that. I think 418 is the easy number on SPY to stay long against. Here you can see we'd have resistance at 420 and then an upside target of 421.50 and then back to the old highs. And then you've got the gap here below. Qs 2-hour. I've got the pivot point at 332. That's where we're trading pre-market. Back here at support. So remember, whenever that happens, and we'll see it on SPY too, I would imagine, is that we'll have an open gap above when we open at 9:30. If things stay the way they are, we'll open down here at 332. Then we'll have an open gap up towards yesterday's close at 334. So that will be, that tricky opening that we always talk about when there's either a gap above or below price. Do they run up and fill it right away? Do they break lower or oscillate here for a while, then go up? And then once they get there, do they fade it back, after the gap has been filled? Or do they just keep going towards 335? That's the difficult part of having that gap there right at the open. IWM had a nice day yesterday. They were up almost 2%. Came up here, gap open. Here's your opening gap from yesterday. Came up through this choppy zone and actually was able to break out above 222.50. I think that's your pivot point for today. As long as it can hold that 222.50, I think it can see higher prices. I've got some intermediate levels here. 224 being overhead resistance, and then right on up the line we go. We'll just have to see how that trades. You know, like I said, it was down early in the pre-market, but not markedly so. So it's going to open probably a little bit below yesterday's close, and then we'll take it from there. Facebook remains strong, not giving anything back. Jumped up to this level. I've got support at 326.25. I think you stay long against that and look for a move to 330, and then we'll see if it can break out to, I believe it's all-time highs above 330. So it remains strong. Watch for any pullback below 326.25. Then it would be vulnerable to a $2 pullback at a minimum. And notice this volume over price void here between, just round figures, between 324 and 320. You don't want to watch that, come back here like that. So, keep your stops tight, and we'll see how it goes. But in general, Facebook has been very strong here lately. Nice trend off the 50-day tag. Apple, moved pennies yesterday, so no changes. You can stay long against 126.50 and look for it to make a move to 128, which was that big level on the daily chart. Anything above 128 bodes well for a longer duration type trade. Anything below 126.50, you're probably going to come back here and test this gap at 125, 25-ish, right in that area, about $1 wide. Tesla, a really nice day yesterday. Made it up to this 625 level where we said there would be resistance, not only lateral resistance, but also from the midpoint of this down channel. So for today, what you're looking for is price to take out 625. That would open up 640 and possibly even 650 on the upside. On the downside, price is still vulnerable to a pullback, either one, to test the bottom of this channel, like a back test and then bounce, or back to this 595 area. There's only a couple dollars difference between the two, so it's not like it's some kind of dramatic level. Bulls have to hold 595, or else price is going to come back into this trading range and probably fill this gap. So if you got long on the breakout or got long on the reentry of the trading range, either way, you're looking good. 625 is your pivot for today. Microsoft, again, a $250 stock that's moving just, literally pennies during the day, didn't do anything. I've boxed in this little trading range. What we're looking for is a breakout above 252. Then there's a minor level at 253, and then a big gap at 256. That's what the bulls want to see. Now, if price drops below this little trading range, not a lot to stop it from pulling back to this 249 area. So that'll probably be more market dependent than anything else. I think if there's any, further upside, you're going to be wanting to go long Microsoft rather than, hunting for a short. If the market is really weak overall and you see the Qs falling apart in general, then yeah, you can go short at 251 and see if you can get a $2 move down to 249 and then see what happens there. But nice uptrend for Microsoft, and it's obviously here holding a bid. Amazon came up to 3,300 for a tag and then finished back in the middle of the range. We've pointed out that 3,250 is a big level on the daily chart because of the convergence of the EMAs. So, as I often say, when you're in the middle of a trading range, it's kind of hard to, take a position right off the bat. What you got to do is wait for a move back up to 3,300 or down to 3,250, where you've got an objective level to shoot against, and that's what I would recommend here today on Amazon. Google, really strong again, outperforming, up 0.75% on a day that was more or less soggy. It just keeps grinding higher. I've put up another little intermediate support level here at 2371, 2372 at these prior highs. I think you can stay long against that and then look for a breakout above 2390 for the next leg higher, where you can see that there's not a lot of overhead resistance in this area. You may see a little something at 2400, but I don't think it's going to be enough to cause some big reaction in price. So Google remains very, very strong. And one thing to think of, we were talking about the 3-day weekend. That's going to be something for us to consider as well. How long do we want to be? How confident are we in our assessment of market conditions? And so if you got Google, down in here and you're constructive on the market and you think we're going to all-time highs, then you sit tight. If you're more of a, intraday or short-term trader that's just buying weekly options, you're going to have an expiration tomorrow, and then you're going to have to decide, do you want to roll that to next Friday, or do you want to just, I'm going to enjoy the weekend, I'm closing out, and we'll pick it up on Tuesday. So you've got 2 sessions to figure that out, but I did want to point out that if you got long just a couple of days ago, you're sitting golden. I think if you wanted to roll your position, you take your profits, you roll up your strikes so that your downside, you're limited, your downside losses are limited to whatever premium you paid. So maybe you put on a half a position or a full position if you're, super confident that the weekend's going to be meaningless. So, you can work your strategy as you see fit. Netflix, like many others, nothing day, but was significant only in the fact that didn't give anything back. I think you just continue to stay long 500. Stay long against 500. Semiconductors, I did make a little change to the chart here. As we've traded around this tight range for a few days, you can see that we've built a larger volume over price level here. So I've put an intermediate support here at 244. I think 242.50 remains the big level you got to hold if you're a bull. But for tactical traders, I think 244 is a good level to shoot against long, and you're looking for 247 at the bottom of the gap, and then a potential gap fill up to 250. But you fall below, I think you'd come into 242.50 relatively quickly, and then if that doesn't hold, then that makes all this look like a fake breakout, and you're coming back to 240 to test this open gap. And actually, there's another open gap down below. So I think that only happens if the market, rolls over in general. I don't think you're going to see, semiconductors fall apart all on their own. I think it would take, a lot of help from the broad market to, bring this thing all the way back. So before we get into the oil chart, if you're new to the channel, I want to thank you for stopping by and visiting. I try to give viewers very objective trading levels to shoot against with targets and additional commentary to help you in your active trading. If that sounds something that's appealing to you, please hit the subscribe button and the alarm bell. You'll get all my content. Then you'll find some useful links over in the show notes where you can register for all my content, and also a link directly to the blog site where you'll find a lot of interesting and informative articles on trading tips, trading psychology, etc., that are beneficial to traders of all levels. Of course, if you've been a long-time subscriber with me, thanks for sticking with me. Please pass the link along to other traders in your group, to Twitter, to Facebook, to Instagram, wherever you hang out. I'd really appreciate that. And hit the like button and leave me a positive comment. I'd really appreciate it. So we talked about oil at the top of the program. You can see that we're pressing against the prior highs here at, let's just call it 66.50. There is some bearish divergence. We had momentum in RSI at this peak at a higher level than we are here at the same level in price. So I could easily draw that bearish divergence on PPO momentum and RSI. And you can see how price has struggled here right at that prior high for quite a while. Watch for a breakout. Watch for a breakout. If, it may oscillate here. I doubt you're going to see some big breakout, before a 3-day holiday. But if and when we do break out, you're going to see, I would imagine, I think you see 70 really fast. A $5 bump after breaking out of this long consolidation. And then, of course, remember that oil is 50% of the commodity index. So here comes high gas prices. Here comes inflation. That'll be a big news item if this does, in fact, break out. If it doesn't and pulls back, then it will have been contained, and those inflation fears will abate. So keep an eye on oil, even if you're not trading it. Gold. A lot of us are in either GLD. Some of you may even be trading gold futures. A lot of you are in GDX, the gold miner basket. I'm in a couple of individual names. I wanted to throw up the gold chart just to show you the steepness of this ascent. It's a little obscured, but it's the the EMA in pink is the 80 EMA. You can see the large separation between the 50 in green, the 20 in blue, the 8-day, and then price. So for me, if we close below this trend line, I'm closing out the miners, because this thing is going to be really vulnerable to some kind of a pullback. I mean, even to the 20, that's a $50 pullback in gold back to the 20, which is at 1846. I mean, we're at, just say 1900 right now. So that's going to be a significant pullback. And then we can recycle long once that pullback occurs, because I think we are in a bull phase for gold, but the ascent is too steep. It's not sustainable. I'm willing to stay in as long as it holds trend. But as soon as it if and when that trend fails, I'm out of the miners, because they're gonna flow with the price of gold. What could affect gold? The dollar going up, or yields rising. That'll probably put the brakes on gold, and then that's where you'd see a pullback. So keep that on your radar, especially if you're in trades. A couple other ones. Coffee. I am long coffee. I believe I have June contracts. So we got a breakout yesterday, and I want to show you the weekly chart where we're punching above this prior close here at 44. We're trading 44.50, let's call it. And so I'm thinking about two things. One, I've got expiration in, let's call it 3 weeks, right? The time decay is going to start accelerating, and of course the position is going to be more vulnerable to any pullbacks as time gets short on those options. So what I'll probably do, I'll be forced to do, is either close it out and just take the win, or roll my position out to July or September and just stick with it as long as it's winning, and then I'll be able to ratchet up my stops. Let's go back to the daily. What did I do here? Yeah, back to the daily. I can stay long against this trend line, and then if this trend line were to fail or drop below this 43.75, then just close the position and wait for a pullback, and then buy it at a support level. I wouldn't be surprised if at a certain point it either pulls back into the 20 or the 50 here, and I'm not interested in trying to short it or anything like that, but I don't want to give up the gains on coffee. So that was a good one, or has been a good one. Now it's all about managing the trade and preserving the win. Here's a setup on this MSOS. This is the Marijuana Multi-State Operator ETF. We got a double bottom with bullish divergence. Notice here at this low, the RSI and PPO both bottomed out. Got a bounce, came back in, but notice at this prior low, or should I say the second low, RSI or PPO and RSI are at much higher levels. So that's your bullish divergence. Usually that setup is money. We saw that on the QQQs. We saw that on SPY. Double bottom with bullish divergence resulted in a rip to the upside. I'm not so sure here, just because the marijuana sector has been so weak, but we are at a big support level. And if you are willing to take, a dollar or two of pain, if this came back to support versus the upside up to this level at 46, then it might be a trade worth taking. I don't think I'm going to do anything. I don't think I'm going to be initiating any new positions into the weekend. In my older years here, I don't want to, I want to enjoy the weekend. I want to sharpen the saw. I want to feed the brain and just push back from the desk a little bit and not be worrying about, oh my God, Monday night, do they pull the rug? I don't want to worry about that. So I'm going to keep this on the radar because I do like the technical setup, but I'm not going to do anything heading into Friday and a 3-day holiday. I sent this out yesterday on FSLY. I think there's going to be a nice opportunity here with this $10 gap. At least we're poised with our finger on the trigger for that gap entry, and then hopefully a gap fill $10 higher. That's only going to work if the market's working. So we've got to, always keep that long, bigger, broader perspective in mind when contemplating any trade. But this one in particular, it's in a group that's been beat up. So if we continue to see those, cloud names and more, I'll just call them bubble stocks, if we can see a continued rebound in those names, and this breaks into the gap, you're going to have a lot higher percentage of a chance of that working. If the Qs are working and those valuation names are working as well, this has the potential to be a really nice trade. So let's wrap it up here. Let's see how the day goes. I hope you have a good day of trading. I hope you found the content useful. Stay objective, stay reasonable, honor your stops, and then you can't get hurt. This has been Chris Butts with Traders Profit Compass. Talk to you next time.